up steam this week, but we're still getting some of the banks, and we're starting to get the FAANG stocks coming in. And you know what that means? It's always led off by Netflix. So they're going to lead us this week before we get the rest of the gang in the next 2 weeks. So what do the FAANG stocks look like? What are their earnings expected to be? You know, what is happening with these stocks, because this isn't a normal earnings season anymore for the FAANGs. This is a time where, you know, the stocks have come down big, and it might matter whether or not they meet or beat, right? Like that in the past sometimes hasn't mattered with these stocks. But which company has a good earnings track record, if any? Let's dive right in and see. So the first one out of the gate is always Facebook, which is now Meta Platforms, ticker META. And as you can see, the chart is looking a bit challenged here. After 5 years, these shares are now down 27%. And year to date this year, they're down 62%. They've missed 2 out of the last 4 quarters. So the street's probably not going to like that too much with this company. But the shares are cheap now, with a forward PE of just 13, even though earnings are expected to be down 30% here in 2022. So remember, Meta Platforms gets most of its revenue from advertising, and that's always challenged in a recession or even just a slowing economy. Advertising always the first to go. So with these big social media companies that are really dependent on the advertising, they are going to be challenged as we go through this period. Also, as we know, Meta Platforms is changing into the metaverse. So what's that costing? What's going on with that area of the business? These are all questions that nobody knows. So hence, that's why you've got the year-to-date down 62%. But again, this is the cheapest out of the FAANG stocks. So will some value investors come in to buy here? We will see. Then we're going to switch it over to the first of the A's, and it's the one that everybody talks about that does have the best earnings surprise track record, Apple, ticker AAPL. And you can see they haven't missed in 5 years. That's very impressive. We did have a pandemic in there, but they flew through that. But you can see even these shares down 22% year to date. It's still holding on to those 5-year gains, however, up 258% during that time period. The S&P 500 up 42%, and even the NASDAQ up just 55% on a 5-year basis. This is also one of the only companies in the FAANGs where earnings are expected to be in the positive this year, up 8.9% on the earnings growth here in 2022. It's, even though it's come down, it's not that cheap with the forward P of 21 times. Remember when Buffett bought in 2016, it was trading, I think, under 10 times at that time. But this is the one that everybody's kind of hiding out in. Will it remain the hideout stock, the stock of choice? It does pay a dividend, but it's yielding just 0.7% right now, compared to, say, Microsoft, one of the other FAANG stocks that pays a dividend, and that one's yielding 1.2% or almost double. So Apple, though, it's got a big fan base, and you can't bet against it, and I'm not, at least not during this earnings season. Then we're going to switch over to the other A, Amazon, and ticker AMZN. And you can see those 2 big misses twice in a row there. Welcome to the leadership of Amazon. For the new CEO, Jassy there. It's getting a little rough. We already know that they are on a hiring freeze, and even with all those job openings, and Jassy has cut a lot of their brick and mortar businesses already, like the bookstores have been closed, things like that. It's down 35% year to date over the last 5 years, still holding some nice gains, up 209% during that time period. But earnings now expected to be down 94% here in 2022. They made $3.24 last year, expected to make only 19 cents this year. And I'm a little dubious. I feel like they might not even be able to hold that. They may go negative for the year. PE is currently 570 because the shares, even though they're down 35% this year, are still rather elevated for that kind of earnings decline. So it's not really cheap on a classic value fundamentals, but some people are watching it. If it weakens further here, could be a little more interesting. But Amazon.com, many of us own it. I own it in my own personal account, and I'm going to be watching it closely this week or this earnings season as well. And then we're switching up to the ends. Netflix, the one that's reporting this week, it's beat 4 quarters in a row. So that's pretty impressive, but nobody cares because of the decline in subscriber growth. So earnings are not a big issue with Netflix. And you can see there in 2020, 2021, they missed a bunch in a row and nobody cared, but that was during the pandemic when they were adding subscribers. So this time around a little different, but they're going with the ad-supported subscriber plan that's supposed to roll out in November. So we're going to hear a lot about that. Year to date, these shares are down about 62% and still up over the last 5 years, up about 98%, but still giving back a lot of that 5-year gain. Earnings expected to be down 11% this year. That's not as bad as some of these others that we're seeing. So Netflix stock really taking it on the chin, even though its earnings not seeing the big contraction that some of the others are seeing. Still trades with a PE of 23, but that's well off of its pandemic highs on valuation. So it's getting to be more attractive here. Will this earnings report turn these shares around? We will see. Then we're going to wrap it up with Alphabet, the G, ticker GOOGL. They've missed twice in a row as well here, but Alphabet has never really cared if they've missed or beat. If you go back in time and look further back, you'll see a lot more red there. They just haven't really cared about meeting or beating. They did put a nice string together, however, during the pandemic, and maybe that gave like a false comfort level to the street and investors that, hey, they're going to beat every quarter now, when they haven't really cared. So now we've got the 2 misses in a row. Shares are down 33% year to date, still up 169% over the 5-year track here. And 2 years, however, just up about 23%, but still up over the last 2 years. Now, this stock has also gotten a lot cheaper. PE now is at 18 times, even though earnings expected to be down 7% here in 2022. That's not too bad, as again, they're very heavily dependent on advertising across all their platforms, and especially in like YouTube. So what is happening with the advertising side, and will they still hold this 7% down here in 2022? Is this a value trap then, with even though the P's come down, but the earnings are coming down too? That would seem to be the case. I own Alphabet in my own personal portfolio. I know many of you own any of these or all of these FAANGs. And if you own the S&P 500 or the NASDAQ, you obviously own all of these stocks. So these are key ones to watch this week, and Alphabet is going to be one of the big ones. So I have to say, this is one of the first earnings seasons, maybe since the pandemic hit, that I can remember that all the FAANG men's are, in the red for the year. So that's not easy to accomplish. But could this earnings reports, could this couple of weeks here turn it around for the FAANGs? It could, because as we've seen, some of them are down pretty dramatically here in 2022, and the valuations are looking more intriguing, but we don't know what they're going to say and what they're going to say on the guidance. So that's why you need to tune in to all of my Earnings All-Stars videos all throughout earnings season, because this isn't going to be a normal earnings season. And I'm going to be bringing you the companies that have the best earnings charts, those that have good earnings surprise track records, and some of those kind of bucking the trend as we go along here. So be sure to subscribe. Don't miss a single episode. We're on YouTube, of course. You can get us at Zacks.com/YouTube. And you can also follow along on my Twitter feed. I'll be tweeting out all of these videos plus additional charts. So you don't want to miss that. You can find me at my name at Tracy Reineck, but be sure to get us somewhere, and I'll see you again next time with some more charts.